Welcome to our Better Money Habits session. I'm Jamie Kahns, Bank of America Better Money Habits Champion. I also serve as our Senior Vice President, Sarasota Manatee Market Manager, ensuring to support our clients, employees, and community every day, helping to make financial lives better. I choose to be a Better Money Habits Champion because I truly believe that everyone should have the power to become financially savvy, take their finances into their own hands, and build a better life. Today, we're going to discuss some practical tips to help improve how you manage your money. The impacts of coronavirus have had an effect on nearly all our lives. Financially, some people have lost jobs or experienced a sudden drop in income. Expenses may have increased as well. This presentation is intended to help by providing guidance to ease the strain on your budget and help you on the road to financial recovery. This is just a disclaimer to please note that for today's presentation, we'll be talking about financial education and not giving out direct financial advice. Let's go ahead and start the slides. For many Americans, financial concerns are ever present. Having a plan to try to manage financial challenges can help ease some of that stress. Plus, the monetary benefits of dealing with financial problems, getting bills paid, saving more, paying down expensive debts, can help improve your overall outlook. Here are a few suggestions for how to help reduce your money stress and get motivated to take control of your finances. First, identify what needs attention. Write down your 3 biggest money challenges so you know what you're up against, whether it's making your monthly payments, reducing credit card debt, or saving for retirement. It's important to focus on the main sources of your financial anxiety and keep the list short so you don't feel so overwhelmed. Second, try to stay positive. Your mindset can help make and keep you motivated to fix your financial problems. Rather than get bogged down by thoughts of getting out of debt or imagine the amount of stress you feel decreasing as your debt load gets smaller and smaller. It's important, most important, to believe that you can do it. Number 3 is be realistic. Determine what you can reasonably achieve, and then dedicate yourself to following through each and every month. Make yourself a promise. Each month, I will spend less and put the difference toward my debt, so my balance declines by at least $100, for example. Just like a crash diet or intense new workout routine can lead to a burnout, you don't want to set overly ambitious financial goals that you may be abandoned in just a few weeks or months. The 4th is make the most of your income. The belief that you simply don't have enough money to put towards your goals can keep you from dealing with your financial problems. Try to focus on making the most of income that you have and spend it wisely. You may consider using an income calculator to see how long it may take you to hit a savings goal. The 5th one is small steps are key. You may not be able to cut out any expenses like $500, but you may be able to identify 5 monthly expenditures you can reduce by 100. Forgive yourself if you slip up. Sticking to a budget is definitely not easy, and there may be days when you resolve falters. If that happens, remind yourself of how much you have to gain by reaching your goals. Then examine your spending patterns to see why you overspent. You may need to modify your budget or your behavior. If you can't go into a super Walmart, for example, and just do your grocery shopping, but you come out with a household of goods and games and clothes, you may want to try to go grocery shopping somewhere else. And final, keep yourself honest. Leaning on your relationships can help keep you on track. Every hard task becomes easier with the support of friends and families. So share your goals. There's no better way to hold on and to be accountable and remind you what you're sacrificing for than those you love, trust, and respect. Now is a good time to really take a fresh look at your budget, to really understand your income and expenses, as well as understand the programs that are out there and available to you. First, let's review options to help with income and spending. We will talk through these 4 steps. First, take advantage of government help. Second, reach out to creditors. 3, recalibrate your budget. And 4th, explore your options for emergency cash. Federal, state, and local governments have taken a number of steps to address the financial impact of coronavirus. For example, the Coronavirus Aid, Relief, and Economic Support, the CARES Act, is roughly $2 trillion stimulus package that Congress passed in March of 2020. It's providing Americans with a wide range of assistance, including cash payments, expanded unemployment benefits, relief from certain loan payments. And when it comes to the relief, there are these 4 key areas to consider, as you can see listed here, that we will go through each one of these. Anyone with federal student loans, including direct loans, FEL program loans, and Perkins loans, can suspend payments from March 13th of this year all the way until September 30th, 2020. And no interest will accrue during this time. This applies whether or not the loans were current as of that March 13th date. While these provisions don't apply to private student loans, many lenders are offering payment deferment programs. In any case, I definitely suggest that you check out the Loan Service Explorer and explore your options. Learn more through this link that's provided here, the Department of Education and Guide. If you do have a federally backed mortgage loan, about 2/3 of home mortgages fall into that category. You may qualify to be able to suspend your payments. Contact your mortgage service provider for details. You can download a guide to new rules for the Federal Housing Financial Agency right here on this page. If your mortgage isn't covered, you should definitely consider contacting your lender. Some banks have communicated that they'll defer your mortgage payments for certain periods of time and not report any missing payments to the credit agencies. Deferment periods vary by lender, so make sure to contact your mortgage service provider to confirm their specific policy. Income taxes. The deadline to file your 2019 federal income tax return and pay any taxes you owe without incurring penalties or interest has been extended to July 15th of this year. Unemployment insurance. The CARES Act expands the types of workers eligible for unemployment benefits to include the self-employed. Weekly benefits may also be increased to help make up for income that's been lost due to the impact of coronavirus. Check with Florida's unemployment agency for filing instructions and benefits. Also, definitely consider checking with your creditors to see if they have announced relief policies. Many have, or if not, what accommodations they may be able to make if you have been impacted by the coronavirus. Here are the kinds of programs that are currently available that we will discuss, including cable and phone companies, utility companies, credit card issuers, auto lenders, and landlords. First, cable and phone companies. More than 100 cable, wireless, and phone companies have signed on to the Federal Communications Commission's Keep Americans Connected pledge to waive late fees for customers affected by the impacts of the coronavirus and not cut off service if a customer is unable to pay. You can see if your provider has signed on right here under the actions. Utility companies. Policies vary around the country, but many major gas and electric companies have temporarily agreed not to turn off service to customers unable to pay, as well as are waiving late fees due to the impacts of coronavirus. And landlords, if you're struggling to make rent payments, contact your landlord directly. The new federal stimulus law offers some protections from evictions if the mortgage is federally backed and the property owner accepts any type of forbearance. Credit card issuers. Many major lenders are supporting customers in need by waiving late fees and offering deferred payment plans. Typically, deferred or suspended loan payments can show up on your credit card report. But some banks are offering to suspend reporting standards to help ensure your credit doesn't suffer due to the impacts of coronavirus. Auto lenders. Many banks and financing companies are making payment assistance available for auto loans. We do have a video. It's a Better Money Habits that walks through everything you need to know to start negotiating with creditors. I highly suggest you take the time to listen to it. It's a 6-minute video and well worth the watch. Recalibrate your budget by first reviewing your monthly budget to assess your needs. It is vital. In this current environment, If you're able to stay home, you may already be saving on certain expenses, including gas, meals, and entertainment. Look over your credit card statements for reoccurring charges for services and memberships. Stop payments to any you won't be using, such as gyms, clubs, or after-school activities. Also, check on your insurance coverages. Some are reducing many of the premiums, like auto insurance companies, because of reduced use of vehicles. There are many ways to make a spending plan. Let's go through one together. The first step is spending plan, of course, is to write down your net income. I'm gonna go ahead and share with you this spending plan a little bit bigger so that you can see it right here. The spending plan is designed to be used monthly, as earnings and expenses are most often received and paid on a monthly basis. So if you get paid twice a month, then multiply that by 2 to get your monthly take-home pay, which you'd put right here. This is how much you plan to spend, is right here in the planned spending column. So let's just say, for instance, you have a goal on spending no more than $300 in groceries. You would plug in what you plan to spend. You go through this planned spending for each of the items listed to the left in the spending category. Now, if you actually go to the grocery store at least 3 times this month, and let's say the first time you spend $90, the second time you spend $85, and the third time you spend $100, that would equal to $275, which would be great. That means you are spending less than your actual plan. So if you do that, then you check the box. You would do that again for each of the spending categories to the left. You plan spend your actual spend to keep yourself on budget. Once you have everything filled out and the actual spent that month, you can total it up. And if you see at the bottom of here, then you would be able to see the totals. So if we just did grocery shopping in 1 month, obviously you would total it up here and you'd be able to see that you were able to stick to your spending plan. Now, sticking to your spending plan is a lot easier said than done. We always suggest to try to revisit and fill out the spending plan once a month to make it a true habit and keep yourself on target. If you don't know how much you're spending, you're never able to save. Still, if you find yourself short of cash, even with using a budgeted plan, and need cash to cover your day-to-day expenses, let's consider the following options. First, there's personal loans. Second, credit cards. Third, your home. 4, life insurance. And 5, retirement accounts. Personal loans. You'll need good credit to qualify for a personal loan. But if you do, rates can be lower than you'll be able to pay on a credit card. And if you don't have a good credit or you're not sure, I highly recommend the Better Money Habits tutorials on your credit report and building your credit. Credit cards. If you're in good standing, contact your credit card issuer or go online to see if you can bump up your credit limit, which may let you charge more or take a bigger cash advance as an emergency measure. Just remember, you will pay interest on these balances, and cash advances do not receive a grace period. If you do own a home, you may have built up equity that you can tap into in using a home equity line of credit. And life insurance. If you have a permanent life insurance policy, you typically can access a portion of its cash value through a withdrawal or policy loan. Retirement accounts. While your retirement account may be a tempting source for cash, especially now that the CARES Act allows anyone who has been financially impacted by the coronavirus to withdraw as much as $100,000 from a workplace plan, a 401k, or even an IRA without the additional taxes for premature distributions for anyone under 59 and a half. With a Roth or an IRA, you can withdraw your contributions tax and penalty free. But with the new legislation, this exemption also extends to your earnings. Just remember that any withdrawals you take are still subject to taxes, though payments can be spread out over 3 years. And if the money is repaid in that period, you may be able to get some or all of the taxes returned. If you're in an emergency situation, carefully weigh the choice of taking money out of your retirement account versus the other options. Similarly, if you recently have a stock market, it's been up and down, and if you have tight budgets, you may be tempted to pull back on retirement contributions to your employer-sponsored plan or to pull investments out of the market. But by investing regularly through automatic payroll contributions, you're buying at a lower price when stocks have gone down. If you can, continue contributing enough to earn your employees' full match. There's a good outline on Better Money Habits of your options for emergency cash. If you don't have an emergency fund or other savings to tap into, you may feel that there's no good options. By carefully weighing your choices, you can make sure you secure the best possible option for you and for the terms for your situation with the least amount of risk. Remember, every loan carries risk. Make sure you understand those risks before making a decision. Learn more about these options for borrowing via this link here, Emergency Cash, What Are Your Options? And learn more about all that Bank of America is offering its customers and clients through the Client Assistance Program website. And I would actually ensure you to explore our resources in our community. Many have shifted their mission to help with the impact of coronavirus. Organizations like the United Way, dialing 911, dialing 211, don't dial 911, United Way, dialing 211, Goodwill, Meals on Wheels, Salvation Army, our food banks, and our great partners like Women's Resource Center have increased their resources and expanded their outreach. Now let's take a stretch and look into that future, hoping that's going to be a bright future for us all. Assuming you have a steady income, consider putting any money you're able to save towards that future emergency fund. You can check out our Better Money Habits site's 6 simple steps to start jump your emergency fund for tips on how to do this. As many of us have experienced, unexpected events can cause unplanned expenses. So having an emergency fund is key on staying on track. Your emergency fund should cover all the necessities you pay for each month, including rent, groceries, utility payments, loans, phone charges, and any other debt or expenses you are responsible for paying each month. If it's just for you, it's a good idea to have at least 3 months of expenses saved up. If you're trying to provide for you and your family members, it's a good idea to have 6 months of expenses saved. And if you are the only earner, or if there's another earner in your family together, you should consider saving 9 months worth. However, in either case, even having a 1 month saved up is better than setting aside no emergency funds at all. Let's look at this example here. Let's say that every month you pay $600 in rent, about $200 in food, $100 on utilities, and $200 on your phone bill, as well as other entertainment. It totals up to $1,200 every month. If you're just saving for yourself, a solid emergency plan would be that for the 3 months, $3,600. You take your total cost and multiply by 3. Because it may be challenging to save that such large amount, let's go over some ways we can save a little more. Now that we've talked about the emergency fund should cover how much yours should be, here are 4 steps to follow to jumpstart your savings. Whether you're just starting to save for a rainy day, as they say, or if you have that already put away or working towards another goal. For starters, know your number. As we just discussed, for an emergency fund, you may need to save for 3 months, 6 months, or 9, depending on how many people you are trying to provide for. Even setting aside an extra month's worth of expenses could also be a goal if you've never put aside emergency savings before. We'll talk about setting other goals in a few minutes. Pick something and cut it. This can be anything from skipping coffee, a soft drink 2 or 3 times a day, anything you're going to the grocery store, stick to your list, use coupons, or choosing something else to cut back on that you might spend too much on but don't need. Make it a routine. If you have a bank account and you work offers direct deposit, you may be able to set aside a percentage of your paycheck every month to go directly into savings. And don't be tempted. Ideally, you should keep your emergency savings in an account that can be easily accessible. However, you want it separate from your main checking account so you won't be tempted to dip into it every day for everyday spending. Consider creating that separate savings account or even a money market account, which usually earns a little bit more interest than your typical savings account for your emergency fund. If you don't have a bank account yet, it may be a good idea to open a savings account and designate that as the place where you keep your emergency savings. Plus, you can take these 3 steps to help protect yourself down the road. Be prepared for future big expenses, check your insurance coverage, and lower your borrowing costs. Even if you don't need access to cash right away, if you are a homeowner, consider a home equity line of credit. It may be a way to secure assets now if you need them in the future. It can also be used for repairs and upgrades, unexpected medical bills, or education expenses down the road. With this credit line available, you may be less tempted to tap into your 401k IRA for big ticket items. Now is also the time to make sure you have adequate life, disability, and homeowners insurance. If you have an eligible high deductible health insurance plan, consider funding a health savings account, also known as an HSA. You won't owe taxes on the money you contribute, and the withdrawals you make to pay for qualified healthcare expenses are also tax-free. You can take some steps now to reduce your monthly loan payments and free up money in your budget. With mortgage rates especially low, consider refinancing your loan. Look at how long it will take for lower monthly payments to make up for the closing cost. As a general rule of thumb, refinancing may make sense if you can cut your interest rate by at least 1%. If you're paying down a credit card balance, think about switching to a card with a lower interest rate. With a history of on-time payments and good credit, you may be able to qualify for a low rate or even a 0% balance transfer. One or more of these tips and ideas could be appropriate ways for you to proactively manage your finances. Preemptive planning, reaching out to companies and creditors, and knowing how you can access some of the options in the government relief packages could make the big difference for you. Well, that ends today's presentation on coronavirus. We will be sure to share this deck and links and spending plan with everything that we talked about today. Thank you for allowing me to present our Better Money Habits to help us recognize and take actions to work out current and unexpected financial challenges. Be sure to visit bettermoneyhabits.com to start taking action on your financial future. Wishing everyone to be safe and well. Thank you.